Good morning, everybody. It's Martin Mazza with the Mazza team, Royal LePage. I'm here today with Joseph Trombetta from the Titan Mortgage Group in Stony Creek. And I just thought this was an opportunity. Joe, I consider a friend. Joe is also a person that I would consider a business partner. We send a lot of clients his way and likewise, and it's been a great relationship over the years. So thanks, Joe, for joining me from your home office. I can see in the background.
Martin, thank you very much for inviting me in this morning on Good Friday, Easter weekend. And it's during this time, I guess we're going to talk a little bit about real estate. We're going to talk about mortgages, mortgage rates. And I know you have a few questions that you're going to ask me, and let's get started.
All right, first question, what's for dinner?
First of all, for dinner today on Good Friday, we normally eat fish. So freshly caught fish, our fisherman in the family is Thomas. And he's been fishing the last week, and he caught beautiful salmon. We have some trout, and, our normal delicacy for Good Friday.
Awesome, buddy.
Yeah.
Okay. Hey, the Bank of Canada has been dropping the rate like a stone over the past month and a half. I don't really know how to interpret that as much as you. And Joe, I would consider you the authority on mortgages, in our area. Probably the smartest mortgage guy I know. And I'm not saying that to butter you up. I truly mean that, because every time I talk to you, it's an education. What's going on with rates? I know a lot of people are wondering.
Well, first of all, you've just humbleized me again, Martin. I'm just a mortgage guy in Stony Creek. Been in this industry for about 30 years, and we've seen some actions over the years. I'm going to tell you that we're in new territories today. Like, this is an unprecedented event that has occurred. I think you and I have spoke off the cuff about events in the past that we've always been able to together jointly guide each other where values were going, where interest rates are predicted to go. But this time here, it's a new event, and it's basically an attack on humanity and the way that we've lived and our freedoms. That's what's being attacked right now. So the government knows that this is, unprecedented times, and you've seen interest rates fall. And at the same time, government is getting prepared to, help out the credit markets that look like they're, not seized, but we're getting a little tighter, and people were getting a little more nervous of the event that was happening and how it was unfolding. And so, of course, they've dropped interest rates quite a bit, but you've seen a little bit of the reprieve on interest rates, and you've seen the bond market just drop out very quickly. And usually there's two different types of interest rates. So you have the prime lending rate is a government intervention, but then you have the bond market that trades based on what where consumers are purchasing these investments for long term, and we've seen that fell quite rapidly, and you've seen the interest rates drop very quickly. We've seen as low as 2.39, 2.29 for 5-year fixed rates. Well, those rates are gone. And what happened is that with the events, the banks are pricing in the risk factor of potential defaults that are coming. Okay, not that they've started. Okay, and forget about deferrals. Deferrals don't come into play here.
Right.
We're talking about actual defaults. Okay, before going into the pandemic, our default rates were under 1/3 of 1%. That was the industry norm. Okay.
When you say default, Joe, that means somebody who they're behind on their mortgage. They're not going to catch up. They might catch up.
those are defaults where we're going into legal action. There's a default that occurs, and eventually there's a house that's going to be sold, right? And that was under 1/3 of 1%.
So
And what we're
negligible.
seeing, and this is before the COVID-19 event. And now pricing, when we look at that, the pricing model of these discounts, we've seen in variable rate mortgages, we've seen lenders used to provide up to 1% below prime lending rate. They're gone. We're actually seeing pricing above prime lending rate for variable rate mortgages. Okay, so we've gone from prime -1 to prime +0.25 on some variable rate mortgages. And
Well,
these
what's
are
the prime rate?
bankable deals.
Sorry.
So prime right now is 2.45.
Okay.
And so if you came to us sometime in December and negotiated a variable rate mortgage at prime -1, prime -0.5, today you're well below the 2% mark on your variable rate mortgages. And if you're coming into us today and you wanted a variable rate mortgage, your pricing would be 2.45 to 2.7% for a variable rate mortgage. So they've changed. Okay. Again, these are because of the potential risk model. Okay. Now, bond rates. Okay. We've seen bond rates fall. They've gone back up with the pricing, and we've seen as high as 3.25% for 5-year money. Okay. But we've seen some reprieve. There is this money that the government is printing to help and make sure that our credit markets don't seize. We've seen this historic, government start to give out loans to small businesses, even forgivable loans, a certain portion being forgivable. Okay. This type of spending will boost the economy and will assist the economy from stopping. Okay. That money has not trickled down yet. It is starting to trickle down now. In the credit markets, we'll probably see it sometime in May. And that will, we've seen a little bit of a drop in interest rates again, but not enough. You will see some of the 5-year money start to drop again. Once the market starts to liquefy into this, where the government is purchasing the MBS issues, et cetera, you're going to start seeing some huge movements in rates, and they could come down. Okay. Am I predicting in the long run, will interest rates drop to 2% or 1.75%, where we've seen some zero interest rates in Europe? I think it's taboo. Most of the economists that I've been listening to, 0% bond rates. If we fall into a 0% bond rate, it's not necessarily a good. We might have 2% money for 10-year money, or 5-year money, but you might not be able to qualify for those mortgages because the qualifications will get a lot more stringent. Okay. So we need to keep interest rates where they are, maybe drop a little bit of a like 2.5, 2.75, somewhere in that range. But I don't see rates falling below that. Banks have to operate. They need a certain amount of, and given the COVID-19 event, we want to make sure that our bank system is very healthy. So very, very important to keep going forward with our banking system, right? Keep it healthy, and that keeps our real estate market healthy. And also it gives us an opportunity to still be able to lend to people to go out and purchase their homes, right?
But Joe, the average consumer right now, a lot of consumers have pulled back in this market, but surprisingly enough, you know, with our industry deemed essential, even with the revised list last Friday, there's still some business going on. You know, very much from a virtual perspective, but still some business. So the average consumer, going back to your point on the rates there, if they were to contact you today, what kind of rate are they looking at with an A bank?
So
Today?
we're still, they're very competitive, under 3%. Okay. There's still very competitive rates out there. Okay. The key to understand, like, you're in the service industry, Martin, when people want to buy, and during a pandemic, people are still buying. Okay. And it goes back to, you know, what we've always talked about. Why are people buying? Okay. Why do Canadians buy homes? It's very simple. It's creating wealth. People want to create wealth for their families.
Yes.
And it's something that it's been instilled in us from our parents, from our grandparents. You need to buy real estate in order to create wealth. Okay. Where if you look at, you know, our values being challenged today, okay, there could be a challenge on values, but people that are own their homes and have their mortgages or making their payments, et cetera, they don't want to lose their house. They don't want to lose their equity. Okay. So what they're going to do is they're going to do whatever it takes with this government that has been very generous with the generosity that's coming from our government today to assist people in need. There are all kinds of programs, the emergency funds that have been created for people, self-employed people. Even if you're still working, you still qualify if you need help, right? You've seen
Right.
some event, like, today is not the day to talk about where rates are going, or where real estate is going. It's today is to talk about, okay, the safety of you, like, of our Canadians, making sure that we're following the regulated, recommended strategies to keep everybody safe.
Yeah.
Okay. This social distancing is a must. We as Canadians have to follow what the government is recommending, okay, for the well-being, okay, of everybody. Okay. So what are some of the measures that we're taking as mortgage people to continue to lend? Because our jobs are important. Martin, your job is important, essential services. My job is very important to keep that money flowing somehow to Canadians, okay, to our clients, to make sure that we assist them in this time of need, right? So the one thing that I'm seeing is that some, not all, some are not really abiding by these rules. Okay. So when we're, we know, you know, that we have some real estate that we manage. Okay. Where Thomas, my son, has the management company. These are, gloves, a mask, glasses. I know they're precautionary measures, but they have to be followed. If
Right.
we're meeting people 6.5 feet, the 2 meter distance, you need to, go and have people are moving into new apartments. We need to be there for them, right? Open the door, give them the keys, give them, the fobs that they're going to need to go in and out of the apartments, right? These are steps that, like, life goes on. During this time, life is going to go on. People are going to learn this could be the new norm going forward.
Absolutely.
How do we adapt? And, Martin, we've adapted over the years, huh? Certain challenges, Martin, and you adapt, you move forward, right? Work will, essential services that are out there, they have to continue, take the precautionary measures, right?
Yeah.
How does it affect interest rates? How does it affect the mortgage process? I mean, things are taking longer, but we're getting it done. Yeah. Are we delivering on time for purchases? Absolutely. Lenders know that, purchases are very important. The monies will be there on the day of closing. Okay. I think you asked the question, Martin, about, the rules of lenders. I think it was. Can you ask that question again? And I'll.
Well, just, I mean, again, deemed essential. Um, are you, and it's not business as usual, Joe. That's something that we keep preaching. It's not business as usual. We're trying to meet a need in the marketplace. People who need to sell because they bought, people who need to buy because they've sold, people who have been displaced out of a home, tenants that on a home that was sold, the need to find shelter, to find housing. I mean, there's a bunch of needs. We are trying to move to this type of interaction, virtual video. This is typically our first interview, our first discussion like you and I are having today here. And
Yeah.
as you said, I mean, abiding by these new rules in place with social distancing is so important. So, but again, there are things, as that you've still got to do, people who need their mortgages written. Do you think coming out of this, there's going to be refinancing and a real need for people to restructure their finances? And will they look at mortgages as one way to make sure financially they get back on track?
Well, I'm going to say to you that, so criteria, for the lenders, right? When you're looking at lending to people, is it getting stricter out there? Absolutely. And lenders, the bankable deals, there's a lot more questions being asked, like how's COVID-19 affecting your job? What are some of the measures that on your job that you're taking, et cetera? So for example, construction workers, right? If right now, let's say if you were on new construction and it's not, new subdivisions, et cetera, is it being affected? Existing subdivision and construction, it's business. It's still going ahead, and with the social distancing, they're implementing in order to meet the demands of delivering these new homes that are being constructed, et cetera. Maybe there's shift work. There's some changes that are happening on the construction, so there could be some delays, but it eventually will be finished and delivered. Okay. So just recently, I took in on a webinar on with Terion, right? Unforeseen, delays, right?
Yeah.
COVID-19 is a delay in the process. Now people are working, so different shifts. So for example, the drywallers move in and do the drywall. They're going to be there on site by themselves. Okay. Electricians by themselves.
Yeah.
Before it used to be HVAC, electrician, and plumbing all at the same time. You can be in the same room. Now they can't. So that
Right.
slows down the process.
Yeah.
And, the drywall goes in, tapes, muds, whatever. Painters could be starting on the second floor and they're on the first floor. No, you can't do that. One group at a time, maybe two individuals that are being, social distancing, again, 6 feet away from each other.
Right.
So it slows down the process, but again, new norm, you got to deal with what's being dealt with, right?
Yeah.
But it's still, with the criteria of the slowdown, it will eventually, I call it pent up demand. It's leading to that, Martin.
Yes.
2020, if you have to sell and you do take a haircut and you're purchasing, you're buying right, you're selling right. Okay. If this event, a vaccine, and when this vaccine comes up, Martin, you already know my opinion on this.
Yeah. Yeah.
It's pointing everything towards values are going to go up, and they're not going to go up by 2%.
And that's the question, Joe, we get daily, absolutely daily. The amount of conversations we're having with clients right now, people who are saying, is the market going to crash? Well, crash is a crazy big word that you can't really defined. Price going up, down. Nobody has a crystal ball. We know that. Number one, we don't know when this is going to be over, really. Number two, we don't know the impact it's going to have on our industry. But I will say that 2020 got off to a monster start. You know, in
Yeah.
January, February, and it even continued into March. There were, you know, lots of buyers in the marketplace. Still some shortages of inventory in certain markets, and we were dealing with multiple offers. And then a lot of that buying did come to a halt. And you just said the right term. There may be, coming out of this, a pent up demand that we could see come back into the marketplace in July, in August, September. Again, the timeline, it's up in the air right now. But when that does happen, combined with low interest rates, you know, people finding the new norm on how to employ people, on how to work, on how to run their businesses. You know, if there's some confidence that comes back into the marketplace later this year, you're right, that pent up demand could drive prices up. And again, it's speculating. We really don't know, but I will say this much: we haven't, through the month of March and so far for April, at least in the Hamilton area, we haven't seen prices drop off. You know, we haven't seen fire sales. You know, we've seen people who need housing come to the market strong, with strong offers. And again, if this pent up demand is held back for 60, 90, 120 days, what are we going to see at the end of that term?
Well, here's another thing that you have to keep in mind. How many listings, people that were going to come onto the market, have decided not to go on the market? Are you being affected with that, Martin?
Yeah, and I think for the right reasons. Again, using that need, you know, qualification, people who need to sell or buy or in the marketplace. Those who don't have sat on the sidelines for the right reason. So, you know, what percentage? It's hard for me to say, but a lot of sellers have just held themselves back from coming into the market right now.
Could I say that a third? Could I use that number?
Well,
A third
yeah,
minimum?
at least, yeah.
A third. Okay. So that in itself, like when you start seeing that there's going to be a lack of inventory, okay, people are standing still. They don't want to move.
Right.
Okay. So that in itself, coupled with delays on new construction, okay, maybe the lack of supply in the near term, okay,
Right.
that's pointing to me. I mean, like basic economics, right? Supply and demand.
Demand, yeah, yeah.
And prices are going to go up. And once it starts again, people that have sat down, like I think there's also another part of me that I'm seeing these people, that I'm talking to these people, in a sense, seeing in a FaceTime, seeing people, okay, but I seen there's a change in attitude. Gratitude, more is the word. Okay, people saying thank you for being here, thank you for talking to me, right? Thank you for taking the time. Where I think there's some to be said about that, because people appreciate service-oriented individuals. Like Martin, we, as I told you, we've been extremely busy in the last couple of weeks, and not necessarily only just work out payments for clients, right, and helping them to defer their payments, et cetera, giving them the proper advice and counsel. Okay. I'm talking about new clients, refinances, people, right, essential services that are out there, and they want to, you know what, our strategy has changed. Like we don't want to just focus on paying off our mortgage. We want to drop our payments a little bit. Right. We want to, you know, consolidate, you know, and I'm seeing that people are going back to that. You know, we rely on each other. You know what, Martin, I rely on your opinions when it comes to real estate. Okay. Joe, I rely on your opinion on, I want to lessen my load. How do we do this? How do we, so they're looking at, and they value our opinions. Okay.
Right.
So that in itself has changed a lot of attitudes out there of what I've seen of people, right? It's not go, go, go anymore. Now it's like, you know what? Go back to the basics of enjoying my family, because normally, husband and wife both working opposite direction. I think it's a time of reflection too, huh, Martin?
Joe, it's almost like somebody hit a reset button for
And
so many
it's
things in this world. The reset button, getting back to family, getting back to, spending time together. I have never in my 30-year career had so many family dinners at my kitchen table as I've had in the last 2 months. And
it's and that's beautiful, Martin, because it makes us reevaluate things in life, right? And our friendship, people that have been there by our side all the time, so our friends, family, etc., right? And you know what, I really believe that when we come out of this, there's going to be a change in attitude. A lot of people are going to um, and you see it too, when a sense of when you're going out there and you're going out and shopping, there is a little more courtesy with people.
right.
There's and
Some,
respecting social distancing and all that kind of stuff. So one of the things that like going back to about qualifying for mortgages and all that, two parts. I mean, are we still lending in private lending? Absolutely. Are we doing bankable deals? Absolutely. But the focus has changed. We want to know the flow of money. What are you doing differently? Okay. And there are some people that need help, that have run into some tough times, private lending, and that we've helped and assisted in deferring their interest costs. Capitalize that interest to the balance.
right.
Yeah.
Joe, that's a whole other topic, and if I could, because I don't want to hold you up all day. It is Good Friday. I really enjoyed this chat, and if you're okay, maybe we could do this again next week. Maybe we can talk about mortgage deferrals and mortgage options that are available to consumers as they go through this. Maybe we can talk a little bit further, about that qualifying and so on. But if that's something that you'd be interested in.
I would be delighted to help to assist you and your clients and our clients that might see this video too. So
Right on. And it's good information. I appreciate it. And so let's sign off. I hope you have a great Easter weekend with your family. Thank you for taking the time out this morning to chat. Great information. Like I said, I could listen to you for hours, buddy, but I don't want to tie you up that long. And I want to make sure this video is something that is that people can listen to and not have to spend a whole ton of commitment at it.
Absolutely, Martin. Again, thanks for your time. Enjoy your Easter weekend, and we'll talk soon.
Okay, bud. All right. Be safe. Stay home.
Take care. You too.
All right.
Okay,
Bye-bye.
bye.